Welcome to More Than Mortgage podcast. Today I am with Cheryl Euart. Cheryl, say hi.
Hey, everybody.
All right. So Cheryl, in my world, is a superstar. She works on some of the outside of the box. Now, she does all mortgage loans, but she is a specialist at some of the outside of the box. Some of the loans that other loan originators don't even know exist and are maybe scared to even talk about them. So today we are talking about a product that a mortgage person would call DSCR. But what I first want to ask is, what does that even mean?
DSCR, it stands for Debt Service Coverage Ratio. So it's a product that's really tailored towards investors and investment properties. The way that the debt service coverage ratio loan works is that they use the appraisal, the rent schedule and net operating income schedule that comes back on the appraisal for investment properties. They determine what the net rental income is going to be for that property. So there's no income documentation required, no employment requirement. We just go off of the net income schedule of the appraisal. So it's a really neat, creative way for investors and self-employed to get approved for investment properties.
So what I'm hearing is, people that maybe don't document their income, maybe they have no income because they're self-employed or they're retired and they want to start buying investment properties. You've got a solution.
Right. So it's definitely a great opportunity to get some of that cash flow coming in. So if you're going to be retiring and looking to purchase some investment properties, this is a great option to use, especially like you said, if you're self-employed, you may claim too many deductions on your tax return, or just not claim enough at all for whatever reason. With the panic, a lot of people are still trying to recoup what they lost. So in this space, they are doing better, but they are having to claim a lot of those deductions. So this is an amazing loan that's no income required, no employment required.
Right. So the only fact is that the amount that the appraiser states as the rent matches or exceeds the mortgage payment.
Correct. So it'd be at least 100%. So that includes your principal and interest, taxes, insurance, and HOA if there's association dues applicable. So that could be on a single family home, that could be on a duplex, triplex, or fourplex, even a condo. Just no manufactured homes are allowed in this program. But other than that, any other property works.
That's pretty fair. Okay, so a lot of these programs in my past have been available, but they've been so hard to achieve because the requirements have been so strict, right? So is the FICO score needing to be a 9 million, or tell me a little bit about that?
That can actually be as low as 600.
Wow.
Now, obviously, the lower the credit score, the higher the down payment is going to be. Okay. But for the most part, if you're in a 680 space, you could be looking at 20% down, which is not that bad at all.
It's almost better than a regular conventional loan. Like 20% down for an investment property is amazing.
And the interest rates are pretty much very close with Fannie Freddie investment rates. So it's not that far off. It's a great opportunity because a lot of investors, they're struggling to get approved. They don't like to show their income. They have multiple businesses, which in their eyes, that could be just really tedious to gather all that paperwork. And it's a little bit of a headache for them. So these investors and these brokers have come up with this program, which helps them tremendously. So there's a lot of great benefits for it. I'm actually going to go over some of those because there's, at least 10 or 13 of them. So you can, like we said, you can have a super low credit score of 600. Initially, the minimum down payment is around 20 to 25%. You can be a foreign national to do this loan, which means no income, none of that. You can own multiple properties. You have quicker application and closing timeframes. So you're not looking at 90 days to close. You can close within 30 to 45 days.
Cool.
Non-warrantable condos are allowed on this. Multi-units, you can get a gift for your cash to close and down payment, which is really exciting because you can get 100% gift.
That's
or
massive.
Even gifts of equity.
Right. Because on
gifts of equity.
On a conventional loan investment, you can't get a gift for your down payment closing costs. They have to be your sourced and verified funds. So this is a big solution to people who are having troubles with that.
Yeah. Even gift of equity, you can get up to 25% gift of equity. So if you are buying from a family member or the estate of a late family member, you can get a gift of equity up to 25% on those, which is great. You can do a purchase or even rate in term refinance or a cash out refinance. So if you wanted to cash out on your investment properties, use that to buy another property and keep building your portfolio. It's a no-brainer.
Okay.
Yeah. So no mortgage insurance. It's a really good option.
All right. So some of the reasons why I call Cheryl a mortgage superstar in my book is she never gives up, right? So a lot of big lenders, if for some reason, they get the appraisal back and the rent's $100 less than they thought and it no longer qualifies, they'll auto-generate a denial letter and they'll say, sorry, you don't qualify, right? Where working with Cheryl for years, her wheels start turning. Okay, well, maybe we'll get a lower insurance quote. Maybe we'll put a little bit more money down. Maybe we'll buy down the interest rate. She's always figuring out a solution to the problem, right? And that's...
And we're analyzing that appraisal too, because we definitely have confidence in our bidders, but there are times where you may have those one-off unique properties. We had one in Georgia. It was a 5-bedroom. It had a basement, and the rent came back like $300 or $400 less, which the loan couldn't work. And you can't drop insurance, $300-$400. So reviewing that appraisal and the rental analysis, it turns out that all the properties that were there, none of them had a basement, which had a full kitchen. It had a laundry room. It had a full bathroom and a separate bedroom. So it was an additional living space, which could have got its own $1,100 of rent. So that really helped once we were able to kind of identify that was missing, and then had that realtor go out and search for comparables that did match because the appraiser wasn't able to find them. So we make sure that we're analyzing all pieces of the puzzle and putting them together.
It matters to have a professional in your corner, 100%. Okay, so let me ask you a question. Let's say I live at home with mom and dad, but I've been reading a lot of books, and there's one of these big motivators out there telling me not to buy my own house, to start buying rental properties. Can I not own a home and for myself and do this?
So yes and no. It really depends on the investor that we're going through. So certain brokers require you to own your own primary home, and some do not. So as long as you have 12 months of rental income that can be shown that you're paying rent, that works. If you own another investment property and you rent or live with family, then we can show that you've been paying that rental mortgage on time for 12 months. So there's ways that, they will make certain considerations, and it's up to the underwriter's discretion, but they work with you. We're not here to just always turn people away, but we got to have it make sense. And in that space, we have to get creative to really dig deep. Did you just sell your house and you're staying with a family member for 30 days? Can we show 12 months? Things like that. So we ask a lot of those questions so that we have that full story.
I think the key is, to reach out, make that phone call to a mortgage professional, ask them the questions. And if you're talking to the right person, if you're talking to someone like Cheryl, every word you say, she's going to analyze and find solutions to all of your problems to make sure she can fund your mortgage loan, because that's the way our brains kind of think, right? All right. So what am I not asking you about this program that I should be asking you? What have I missed?
Well, what documents do I need to provide?
Okay.
Right. Okay. So if I don't need income and I don't need a job to do this, we need your photo ID. We need a full loan application. Okay. We're going to need to source the funds to close. So we would need bank statements, covering 60 days, just like Fannie Freddie asked for. So we have to verify the identity, pull your credit, things like that. And now if it's a foreign national, then in that space, if you are in a country that doesn't have a credit report or a credit score, then we would have to get credit reference letters. But other than that, there's no tax returns, no CPA letters are required, no P&Ls. I mean, it's just amazing. So that's the documents that you would need to do. And you would apply through your mortgage loan advisor or someone at Community Lending that can help and get that process started. And you don't have to wait, like most banks or whatever would take to get an answer to you. It's fairly quick because we know what the guidelines are. There's no documents to review. It really comes down to that appraisal, which you'll get once you're in contract.
Awesome. All right. So, after spending a couple minutes with you on this call, I'm comfortable with Cheryl, right? So if I want to contact Cheryl and I want to trust my family and my children, under your wings, how do I get a hold of Cheryl to apply for this mortgage loan?
I prefer a phone call because emails can get lost. So phone call is best, and it's number 561-880-1204. And we'll have that conversation, kind of just go over what their goals are, how quickly they're looking to accomplish. It's just set those right expectations. But we want to make sure that all parties involved, especially the realtors, are on board and understand how this works. Because a lot of agents don't know how this program works. And when they're putting an offer in, they can't be agreeing to a 10-day loan commitment or 20-day closing. These things are a little more detailed.
Yeah.
Right. So we have to make sure that we're just setting the right expectations, and then we'll exceed those.
Awesome. Well, I appreciate you taking the time with me here today, and I look forward to seeing you in the future.
Sounds good. All right, Bob. Take care.
My money don't jiggle, jiggle. It folds. I like to see you wiggle, wiggle.
Back on.
For sure.